I think the main reason why the state bank has not dropped the interest rates is the uncertainty about the value of the dollar vis-a-vis the rupee. And we saw in the last few days uh, Pakistan taking some administrative actions to try to shore up the value of the rupee. And the dealers were called in, the bank presidents were called in. So there was a lot of concern about the value of the rupee and trying to keep it stable. So I think in this environment, uh, the demand for decreasing the interest rates by the industry was fraught with risks because it could have led to uh, the dollar value going up in comparison to the rupee, and this is against the policy of the government. So, in a way, the state bank has followed what the government's concerns are, and they are trying to maintain the stability of the rupee in comparison to the dollar. And also, we should not forget that uh, the State Bank of Pakistan is buying lots of dollars in the market, and that also puts pressure on the value of the rupee. So, in a way, this was a good decision in terms of stability, but of course, it will not be welcomed by the industry, which sees that with inflation, even forward-looking inflation at 6 to 7%, the rate could have been cut to at least 9% or somewhere in that region, and that was their major demand, and which may happen in the future once the rupee gets a bit stable and it's not so jittery. The major problem with investment, as you mentioned, is, I think, a lack of confidence in the conditions in Pakistan, in which we have seen that the business community had met the highest powers in the country, and they have really complained about the tax regime in Pakistan. And they have complained about the high-handedness which the tax authorities in Pakistan are employing, and the power which is given to the tax authorities to impose their will on the business community. And I think that is the biggest dampener on investments by the big business community, because they see a lot of harassment by the bureaucracy, particularly the tax bureaucracy, and they would like to see reduction in power of the bureaucracy and maybe a reform program in which the tax is not that important as compared to investment. So they would like to see investment promoting policies from the government, which has not so far responded in that fashion. And investment doesn't seem to be high on the agenda of the government. Well, I think, as I was just saying in the previous question, it seems that the government is really concerned about the stability of the rupee, and they would like that the exchange rate becomes better in terms of rupee going forward. So right now, the rupee dollar exchange rate is around 283, 85 rupees to a dollar. And it seems that the target is a bit lower than this number. So it is, interest rates are not the focus of the state bank at this time. They are playing a bit cautious. Uh, they think that stabilizing the rupee is a much better way of controlling inflation. And also, they think that premature reduction in interest rates may cause some imbalances in the balance of payment area and also in terms of related to that in terms of imports, particularly of machinery and technology, which the at this point in time the reserves are not sufficient to have a freer import regime. So I think the state bank is trying to buy dollars from the market, and they would like the exchange rate to be stable during this whole process. I think the focus of the federal government, and also I think the focus of the IMF program, has been on trying to improve the tax to GDP ratio. And that we can see in almost all the conditions which the IMF has imposed on Pakistan in the current IMF program. So I think that this focus means that Pakistan will continue to have a very slow growth. The business community feels that it is heavily taxed. It also feels that it has to explain every move to the government on their investments and on their operations. And that is not very conducive for having an environment in which investment can take place. So I think that the government's focus has to shift from increasing taxes and balancing them with expenditures to a focus in which you would decrease your expenditures and maybe then reduce the taxes. And that would mean that the private sector would find more space for a recovery and investment for 2026. So there is no sign so far that the government is interested in reducing its expenditures. Already we see that the bureaucracy is entrenched in economic decision making, whether it is the energy sector, whether it is the agriculture sector, in terms of the import regimes, in terms of an exchange rate which is market based. Everything is kind of bureaucratically run. And we need to have kind of a government which is much smaller. We need a lot of deregulation. We need massive amounts of privatizations. And we need an investment climate in which private sector can invest and also foreign investor can invest. So I think the government is in a fix what to do. And on the one hand, they are trying to raise the tax to GDP ratio by imposing new and better ways, I guess, in the government's view of taxing the economy, whereas we need policies which would help in improving investment to GDP ratio. What we have seen is that the investment to GDP ratio at this point is probably at its lowest level ever in the history of Pakistan. And that is very alarming, but still the government does not focus on trying to improve that. So for Pakistan to really sustainably start to grow after the stability and austerity program of the government would be a major reduction in government expenditures and a tax break for the private sector and uh, some incentives for the private sector to expand their capacities, particularly for the export sector, and be able to provide an environment in which the economy can be a lot more productive and a lot more competitive. And for that, you need very major investments in the economy. Yeah, I think, this is the crux of the problem. And Pakistan really is very vulnerable to external shocks. Don't forget that this surplus is on the basis of very good remittances because there has been exodus of young people from Pakistan finding employment overseas. And also, the oil prices have been much lower in the recent past compared to a few years ago. So, anytime the external shock hits Pakistan, Pakistan's economy will find very major deficits in the current account. Uh, and for that purpose, it's very important that the investment incentives for the export oriented industry are implemented because that's where the growth has to come from. And that means you have to have investment in artificial intelligence and in semiconductor chips. We are talking about rare earth minerals. That would be very positive if we can pull it off. And the whole value chain of the new industrial revolution, which is based on artificial intelligence and the chips and green energy and electric vehicles. And these are the things which will need huge amounts of investments. And I don't see that we are particularly focused on trying to create an investment environment for the new areas and new technologies. So I think that we will continue to muddle through 2026 unless the government changes its focus from uh, increasing taxes to a focus on increasing investment. It's a good development that your credit rating has improved, and it certainly gives a better signal of better times. But don't forget that Pakistan's credit rating in 2008 was B plus, and since that time we have never gotten back to that rating. So from B plus, we went to triple C and then triple C plus, and now we are at B minus. So in a way, we have not even recovered yet to the situation which we had in 2008. And since that time, I think the situation we have had a couple of IMF programs which have to a certain degree worked, but our credit rating is still not in the B plus area. We have some distance to go. But as I said, it's a good indication, and we should develop a momentum around this in terms of getting privatization moving, getting some FDI into the country, creating an environment in Pakistan in which investment can take place, which basically means that our political environment has to be much better. Our fiscal kind of management has to be much better in terms of reducing the size of the government, and our focus on development and getting into the next modern fourth industrial revolution. We need a plan which the world will believe and which they will invest. So right now we get indications that the US might be interested in investing here, or maybe China is investing here. But these are all kind of in the air at the moment. Nothing concrete has happened in that respect yet.